Hey everybody, so on today's episode, we're going to be doing things a little bit different. So it's actually going to be a recording of a webinar that I did earlier this week for first-time home buyers. So you can see that it's a pretty long recording. It's much longer than my normal episodes are, but we're basically going over everything that first-time home buyers need to know to be able to purchase a home this year in Southern California. So we start from the budgeting stage, and then I walk you through how to talk to lenders, what to look for in homes, how to place offers, going through escrow, the paperwork, contingencies, everything you need to know all the way to where you get the keys handed to you. So if you are thinking of buying a home this year, this episode is packed with some very valuable content. So now before I send you to the webinar, there are two things I want to let you know. So number one, I was sick at the time. In fact, I'm still getting over it. I have kids. I feel like I'm sick every other week at this point. So if you hear some coughing and sniffing, hopefully it's not too distracting. And then number two, this webinar will only be up here for a few weeks, so it's not going to be up here forever. So if you do want to watch it, you just want to make sure that you do it over the next couple weeks if possible, because I will take it down at some point. However, I will be putting on another webinar in a month or two. So if you are interested in catching the new one, feel free to follow me on social media. I'll advertise it plenty up there. You can sign up and you can get your questions answered live as I go through another first-time homebuyer webinar. So let's go ahead and get into it. So we'll get straight into it. So number one, budgeting. So obviously before you purchase a home, you want to make sure that you're able to do so. So the first thing that you want to be looking at is your budgeting. Now, there's a lot of debate on who should you talk to first. Should you talk to a real estate agent? Should you talk to a lender? Should I figure out my budget first? I typically err on the side of talking to a lender first and then looking at the budget after. The reason I do this is because the lender is going to be able to run a lot of numbers for you, figure out what your interest rate is going to be, figure out what type of home you're able to afford, not necessarily the type of home that you want to afford, which we'll go over in a minute, but what type of home you're able to afford. And that way you can take those numbers and then go back and then start creating a budget and see if it makes sense for you to be able to purchase. Does it make sense for it to be affordable right now? Is it something that you can actually go ahead and do without feeling like you're house poor, where all of your money is constantly going to your mortgage every month and you have no money to go eat out, go take vacations? Because ultimately you want to be able to afford the house you're in. You don't want to be stressed every month. Am I going to make my mortgage payment? Now, lenders, especially nowadays, really have to qualify you well to make sure you can afford a home. So if you're qualified to purchase a home, typically you can. However, you independently, because it's your finances, not your lenders, want to make sure that you're actually able to purchase that home. So the first thing you want to do is contact a lender. Now, if you don't already have a lender that you trust, if you have a credit union, I always recommend talking to them because typically they have pretty good interest rates. Otherwise, I do have plenty of referrals I can give to you, great lenders that are great with customer service, great with rates, and really good, especially for first-time home buyers, to walk you through that process of what all the loan stuff looks like, because it is a complicated process on the loan side. So you want someone that can hold your hand, walk you through that process so you don't feel lost or confused on that side of things as well. So once you talk to a lender, there's a couple questions that you're going to want to ask to figure out if they're the right lender for you. So number one, I always tell buyers to ask this question is, does the lender offer fully underwritten pre-approvals? Now, what a fully underwritten pre-approval basically means is typically, let's say probably 4 or 5 years ago, most lenders were giving out pre-approvals. So what basically is you're giving all the information to the lender, your paycheck stubs, and giving a bunch of documents to them, W-2s, tax information, and they're giving you a number basically saying this is exactly how much I can afford. Now, yes, that is great, and that is a good way to start the process. However, especially as we go to 2024, where it looks like demand is picking up faster than supply again, and we're seeing multiple offers on a lot of homes, anything you can do to be a little bit more competitive is going to be advantageous to you. And a lot of that competitiveness that has nothing to do with the price is going to be up to the lender that you choose. So what a fully underwritten pre-approval is basically they're going one step further as a lender. So they're gathering all the documentation from you like a pre-approval. However, this time they're going to send it through their underwriting department, which is who approves the loan and ultimately gets you that loan to be able to purchase the house. And things like this are going to come up. So when they go through that fully underwritten pre-approval, they might ask for something like, let's say you had a family member that gave you $20,000 as a gift for a down payment. On a pre-approval, they're going to verbally ask you where that money came from, what it's for. But for a fully underwritten pre-approval, they're going to ask for documentation around that. So they're going to get every document they need before you even start looking for homes to basically fully approve you for the loan. So that way, when you go out looking for a house, you can confidently go in and actually purchase that home. Now, the other reason it's important is because on the selling side of things, when a seller sees an offer that's fully underwritten, they have a lot more confidence in that offer. So one of the biggest things besides the price that sellers are always looking for is this buyer going to be able to close escrow? So they want to know that if they go into escrow with you, that you're going to be able to cross that finish line and purchase the home. So if you have that fully underwritten pre-approval, that's almost a guarantee at that point, as long as the appraisal comes back fine, that lender is going to be able to fund that loan and get that house to you. So that's something that can give you a competitive edge. And it's something that I have seen actually get my buyer's offer accepted over someone else's that had a higher offer, because they had that confidence in the lender and in the buyer's ability to purchase that home. So it's extremely important. Ask the lender if they offer fully underwritten pre-approvals. Another thing you want to talk about with the lender is you want to figure out their communication style. So some of you might prefer text, some of you might prefer email, phone calls. You want to make sure that the lender is communicating with you in a way that is comfortable for you and a way that makes it easy to communicate. And the other thing is you want to make sure a lender is actually open and able to talk to you when you need their help. Oftentimes, when you go to bigger banks like Bank of America, Wells Fargo, depending on who you're dealing with, you might be dealing with someone from the East Coast. And if you're dealing with someone on the East Coast, you might be in the evening hours trying to figure out some paperwork, and their offices are already closed. So that could be a huge problem, especially once you get into escrow. If you have all these issues where you're basically not able to get them solved in a timely manner on the West Coast time, and you have to rely on them getting back into the office in the morning, it can cause major issues during escrow. So it's something that you really want to make sure that you're working with a local lender, someone that can be available on the weekends if you need them to answer questions, and basically have flexible hours. You want to be able to get a hold of them when you need to get a hold of them, because going through the escrow process, it can be unpredictable at times, and you need to know that they have your back. So you want to make sure you're vetting the lender for those type of things. So once you talk to a lender, they're going to give you that pre-approval. So once you get that pre-approval, hopefully that fully underwritten pre-approval, now you can go back and say, okay, is this how much I actually want to spend? Because a lot of times the lender, let's say, might approve you for $1.2 million. However, you know that you don't want a mortgage that high. So just because they approve you for that much doesn't mean you need to spend that much. And this is where it comes down to the budgeting side of things. So you want to make sure that, yes, the lender might have approved you for a higher amount, but does it financially make sense to go with the max amount that the lender approved you for? Oftentimes it doesn't. Oftentimes you want to back off that number a little bit, because there's other things that you have to take care of. If you have kids, you've got childcare, you've got plenty of expenses to go along with that. And on top of that, you have utility bills. You have to save some money in case things happen to the house. So there's a lot of different things that you want to make sure that you're budgeting for besides just your mortgage payment. So this is where it comes down. You want to go through all of your bills for the last couple months and figure out where your money is going. And so you have a better understanding of how much you have coming in every month, how much you have going out. Are there things you can cut? You just want to have a good idea of your general finances. So that's the step that you want to take, usually after you talk to a lender, to create that budget to figure out exactly how much you want to spend on your mortgage versus how much you're actually approved for. So when it comes to things like utilities, if you're renting or living with your parents right now and you've never purchased a home before, you might not really have a good idea of how much utilities cost. So depending on the area and the type of home you're living in, it could range from a bunch of different numbers, but I'm just going to give you some quick examples. So for instance, my personal experience from having a home, single family home, single story, a little over 2,000 square feet, I usually keep my thermostat during the summertime, 74 degrees, during the wintertime, around 68 degrees. My electric bill during the winter months is obviously not as high as during the summer months. So you have to be able to kind of know there's going to be some flexibility with utilities. So right now, my electric bill is probably just a little over $100 a month. However, during the summertime, it can get up to $500 a month if I'm keeping my AC on a lot more often. And then vice versa with the gas bill, Typically during the summer months, I have a low gas bill, $17 a month. But during the winter months, if I have my heater going, I have my gas fireplace going, it could be $100, $150 as well. So it depends on what type of home you're living in. Obviously, if you get into a condo and the HOA is involved, HOA might pay for some utilities. So that's something that you're going to want to look at on a case-by-case basis. You just want to be able to know what utilities that you're responsible for and what utilities that the HOA is responsible for before you start placing offers. That way you can better budget. But ideally, you're going to want to have a few $100s set aside every single month for utilities. And then on top of that, you're going to have things like cable, cell phone bills, Netflix, all those other subscription things that you pay for. You just want to make sure that you take all of that into account when you're looking at your monthly budget to figure out, can I afford a home right now? And can I afford this mortgage payment without feeling stressed every month? So once you figure all that information out, then you can start to move on to the next step. So let's go ahead and go over the actual cost of purchasing a home. So right now, typically, depending on what type of loan you get, you're going to have at least 3 to 3.5% down. Those are typically FHA loans. However, conventional loans, you can get as little as 5% down. So one of the biggest home buying myths out there right now is that you need 20% down to purchase a home. That's definitely not true. The average American right now that needs a loan for the home is putting usually about 10 to 11% down for their down payment. So 20% is not going to be something that you have to have in order to actually purchase a home. Now, when it comes to what the costs are inside of escrow, let's go ahead and look at some of those as well. So number one is going to be your earnest money deposit. So this is basically part of your down payment. So let's say that you're going to be putting $30,000 down. Typically, your earnest money deposit, which is basically a deposit you put into escrow once escrow opens up, is going to be anywhere from 1 to 3% of the purchase price. So depending on the price range of homes you're looking at, that's going to obviously change the amount that you're going to have upfront to put into escrow. Now, that amount is going to be applied to your down payment eventually. So it's not separate from the down payment, but it is money that you have to have liquid upfront, ready to deposit in escrow, typically within the first 3 business days of opening escrow. So you want to have that money set aside already. Now, during escrow, you're going to need things like a general inspection. So someone to come out there, look at the home, give it a general idea of what's going on with all the different systems in the house. That's something that you do have to pay for up front. Typically, inspections right now are usually costing anywhere from $400 to $750, depending on the type of home. If it's a large home, could be more. If it's a unique home, could be a little bit more. But typically, I usually recommend budgeting around $500 to $600 to be able to get that general inspection. And then the appraisal portion, so if you're getting a loan on the property, typically you need an appraisal. Sometimes the lender will pay for it. Sometimes they'll roll it into the closing cost. But oftentimes, that's another expense that you're paying up front that you need to have cash liquid ready to go. And again, typically, those are going to run about $500. So it's something that during escrow, I recommend usually you want to have about $1,000 to $1,500 set aside for the different inspections and things you need done inside of escrow. And then at the very close of escrow, you have your closing costs. So again, with this, typically, you're going to want to have about 2.5% set aside to be safe to cover different closing costs you have. So some of the closing costs are going to include your escrow fees. So the seller will pay their escrow fees. However, you're in charge of your own escrow fees. You also have things like prepaid insurance, prepaid property tax. So there's a lot of different prepaid things that you're basically paying because they're done in a 6-month chunk. So depending on what time of year you buy the house, you might owe a little bit more in prepayment taxes. And depending on the time you buy the house, you might owe a little bit less. But typically, you want to have around 2% set aside, maybe 2.5%, again, to be safe, to know that you have enough set aside for closing costs. So that's kind of how much you need to have ready to go. And then, like I said, the down payment, depending on what type of loan you're getting, could be anywhere from 3.5% all the way up to whatever you want. So typically, most people are not putting more than 20% down on a regular loan, but you can definitely put more than that if you want, 30%, 40%, 50%, just depends on your finances and how you want to structure your loan. Okay, so now we're going to go ahead and move on to the next section. So this is the cost, the section that typically during escrow, and I say typically with an asterisk because it's not always the case. It really depends on the type of market. These are some of the costs that the seller will typically pay for during escrow. So we just went over your costs. These are the costs that the seller, again, in a lot of cases will pay for. So usually, depending on the contract, right now in California, a lot of times the seller is going to be paying for the selling agent commission, but they're also paying for the buyer's commission. Now, that's not a guarantee, especially with all the lawsuits going on. I want to make sure I stress that the buyer side commission is not guaranteed to be paid by the seller, but typically it is going to be. And if it's not, they're going to let you know up front it's going to be in the MLS. So there could be a situation where it comes up where the seller is not willing to pay anything for the buyer's agent commission, but that will be disclosed up front. You'll know about that when you tour the property, and then you can talk to your agent about the different ramifications and what's involved if the buyer's agent is not getting paid by the selling agent. Now, again, this depends on the market. Next thing is a 1-year home warranty. So oftentimes in California, the seller will basically give you a 1-year home warranty when you purchase the home. You do have to put it in the contract. However, it's basically just a goodwill gesture showing that, yes, I'm selling you this house. However, if something happens to the house within the first year, a lot of issues that might pop up can be covered with this home warranty. So that is something that you can put into escrow right now because we are still in a slight seller's market. I would say it's about 50-50. 50% of the time, the seller is going to pay for it. 50% of the time, it's up to the buyer to decide if they want that included in the purchase price of the home or not, or if they want to pay for it separately. Now, like we already talked about escrow fees, typically the seller pays their escrow fees and you pay yours. So the seller is paying their side of escrow fees. Now, title insurance. So the seller's title insurance, that's something that's basically saying, hey, Mr. and Mrs. Seller, I just want to have insurance that I know that you're legally allowed to sell me this property. Excuse me. And basically, you're not going to have someone come in, knock on your door a day after you purchase the house and say, hey, I'm actually the owner of this property, or hey, we had some kitchen work that we did on your property. You never paid us. We need you to pay us now. So that title insurance is there to protect you as a buyer, to make sure that when you take over that property, it's free of any liens. You know that you legally purchased that property. So that's something that's typically the seller is going to pay for. Now, if you're buying the house in an HOA, then usually the seller is also going to be paying for all of the documentation needed to give to you when you transfer that into your name. So this is going to include your CC&R. So basically all the rules, the regulations, everything that you need to know about that HOA. The seller is typically going to pay for those documents. They get sent to you during escrow. And that way you can review those documents to make sure that you're comfortable with all the different regulations that HOA has. And it's not something that's coming out of your pocket. And then lastly, termite report. Now, again, in today's market, this is probably 50-50 because it is a slight seller's market right now. But oftentimes, you can ask the seller to do a termite inspection on the house. And if they find any damage to the property, you can often negotiate the seller to fix that damage. So whether it's termites or any other wood-destroying pets, or even pests or wood rot, a lot of times you can get the seller to pay for that before you agree to take over the property. Okay, so that's kind of all the information in terms of the money side of things and the budgeting side of things. So now we get to the fun part, which is actually going through and looking for your house. So this typically is one of the best parts. Most buyers love going through homes. They've watched it on HGTV. They're sitting on Zillow for years, checking out homes there, but actually walking into the property, it's a completely different experience, especially when you know you're looking for a property to purchase on your own. So a couple things you want to do before you start this process is you want to figure out your must-haves. And you probably have heard this before, but it's a really good idea, especially if there's more than one of you purchasing the property, to take a day, sit down, and start listing those must-haves that you have to have in the property before you can even think about purchasing it. So this could be things like the number of bedrooms, the neighborhood, maybe even things like a pool or not. Some people absolutely want to have a pool in their next home. Others will absolutely not want to have a pool. So you want to make sure you're on the same page with this, because you don't want to go out touring properties and one person has a must-have list that's completely different than the other person. And someone gets excited about a property, wants to place an offer, and then the other person is not excited at all and wants to pass and find another home. Before you get into that conflict, it's a much better idea to sit down, hash out those must-haves and things you might like to have, but maybe necessarily you can give up if you find the right combination of everything else that really matches up with what you're looking for. So once you do that, there's two ways to tour properties typically. You're going to have the open houses and you have private tours. So typically when a property first hits the market, they're often going to have open houses at least for the first couple weekends to allow as many buyers as possible to check out the homes. It's not always the case, but this will typically happen at least for the first week or two when new homes hit the market. Now, if you're working with an agent, you don't have to go with your agent to these properties. You can go independently. However, when I work with buyers, I typically always go to the open houses with them as possible, because I just like to be a third set of eyes looking at the property, especially first-time home buyers. It's important to have someone experienced with you walking the properties, pointing out some of the red flags, things you need to be paying attention to as you tour those homes, because you might not be familiar with the different aspects of the house and really what to look for. And I typically find that once you do about 5 or 6 of these tours with an agent, you start to get really good at looking at those same things as well. And you have a much better eye of exactly what to look for when you walk into a home and start checking out a house to figure out, is this going to be a home that's going to work for me? What are some of the red flags? What are things that I need to look at? And really have a much better understanding before you decide to place an offer on it. Now, the other thing that I always say, especially in today's age, when you're touring properties, is always assume that there's cameras in every single room. So if you're a home buyer looking for a property and you walk in and you're just saying how much you love this house and you'll pay anything for the house, I don't care what the price is, it meets everything I need, you have to understand that the seller might have a camera in the house recording that. And unfortunately, even though it shouldn't be, it could be used against you if they can see that information and they have access to that video. So I always recommend, before you even get into the driveway, you just understand that when you're touring the property, you're not saying any overly positive or negative things about the house, because on the opposite side of things, you don't want to be trashing the house and then go place an offer on it. And the seller understands that, hey, this is the person that trashed my house and said it was horrible. And you don't want to have that any kind of bias looking at your offers because they went to the house and you had opinions about the house that they were able to see before you even placed an offer. So I always say, try to keep the conversations to a minimum while you're in the house. If you're with your agent, walk outside afterwards somewhere far away in a different driveway, because the better the cameras get, the better the audio get. And I know plenty of cameras out there that can easily pick up audio in driveways now. So try to walk away from the property as far as possible before you have those conversations. And then you can have that conversation about what you liked, what you didn't like, and any possible information you need to give to the agent about possibly placing an offer. So again, that's just something that in today's age, I always recommend that buyers just make sure that you walk through the property and keep all your comments as neutral as possible. Okay, so once you go ahead, tour some properties, let's say you finally find one that you like. So you go ahead, it matches what you're looking for. So what's the next step? So the next step, a lot of it is going to have to do with the agent. And this is where the agent really becomes really important during this transaction, having a good agent, because what they do over the next couple of days could make or break your deal. So the number one thing the agent is going to be doing is, one, they're going to be talking to the selling agent. So when you find a property you like and you're thinking about placing an offer, your agent should always be contacting the selling agent directly and figuring out what is the seller's motivation. Why are they moving? What are they looking for in an offer? Because oftentimes price isn't the only thing that the sellers are looking for. So for instance, let's say that the seller is trying to find another home for themselves while selling their property at the same time. This is completely common, happens all the time. But when that happens, oftentimes, especially if the seller hasn't found a replacement property yet, they might not want a short escrow. So you might be thinking, I'm going to be super aggressive. I want this house. I'm going to shorten this escrow so the seller can get their money as quick as possible. that actually might not be what the seller wants. The seller might want some time to go out and look at properties and find one for themselves. So if the agent doesn't take the time to go through, talk to the selling agent and figure out exactly what the seller is looking for besides the price, you could be setting yourself up for failure before you even place an offer. Because when you place an offer, you want to make sure it has every term as much as possible that the seller is looking for, while keeping yourself protected and obviously making sure that you get a good benefit and a good deal out of the offer as well. So make sure your buying agent contacts the selling agent, gets all that information up front. The next thing your agent should be doing is looking over the comparable sales for the neighborhood. So this is where they're coming up with the price, because just because it's listed at that price doesn't mean it's actually worth that or that it will sell for that price. So there's a lot of different things that are going to influence the actual price of the home that it sells for, besides maybe even just the last couple of sales. So number one, the agent needs to be looking at all the comparable sales, and they need to be going over this information with you. So if you have an agent that says, oh, I looked at a few of the sales in the neighborhood, and this is probably what it's worth, if they're not giving you some concrete evidence on exactly why they and how they came up with that number, that's probably not a good sign. You want someone that's going to sit down with you and basically go over how their whole process works, how they come up with the comparable sales, how they adjust those comparable sales. Because usually, unless you're in a complex with like a condo complex or in a very cookie cutter neighborhood where all the homes were built recently, all the same type of model, floor plan, there's going to be some differences in the houses. So you might have to add or subtract some square footage, both inside, outside, the condition of the house. A bunch of different factors can influence the actual worth of the house. So you need to make sure that your agent is accounting for that when they're looking at comparable sales, and not just trying to pull up some of the most common ones and put it together and average them out for you without doing a more in-depth research on it. So that is something that your agent should be doing once you decide that you like a house and you want to place an offer on it. Looking at those comparable sales. They want to be looking up the tax records so they can give you an idea of what the tax is going to be on that home, as well as if there's any additional things you need to know about taxes on that property. So oftentimes, let's say if you're trying to purchase a home that's relatively new, you might have something called Mello-Roos on it. So Mello-Roos is basically an added, you can call it a tax, basically an added tax that you're paying every single year for a set amount of years, typically 20, 30 years. And it's basically on top of your typical property taxes. So if you go in thinking your property taxes, let's say, are 1.1%, but on top of that, there's another $1,000 you have to pay every single year on Mello-Roos. Sometimes there's more than one of these assessments. It can start getting really expensive. And then all of a sudden you get into escrow and then find this information out. And now you're stuck in escrow already and have to go figure out, do I want to stay in escrow? Hopefully you're finding out during your contingency period, which we'll talk about in a second. But you're going to have to figure that information out and basically have to make a decision while in escrow if you actually want to stay in escrow on that house or not. It's so much better to get all that information up front so you can make an informed, educated decision before you even decide to place an offer. So that is something that your agent should be doing as well. And then lastly, this is something that you need to be doing, and it's something that's really just popped up in the last 2 years: insurance. So you might have heard about it before, and it's becoming more and more of an issue with all the different fires and insurance companies backing out of California. Insurance is getting expensive. So the price of insurance has been going up. There's some areas that insurance companies just don't want to cover anymore. Some neighborhoods, even some cities, that they just won't touch. So what you typically want to do, if possible, before you place an offer, contact your insurance company, say, I'm thinking about buying this home, give them the address, and have them run some basic numbers on what insurance costs would be for that specific home. If you already have a provider that can bundle your services together, that's a good start to get some information and just give you a general idea of how much insurance is going to be, because that has been a big deal killer over the last 2 years, especially if you're in a high fire zone, because insurance can be extremely hard to get. And when you do get it in a fire zone, it could be extremely expensive, anywhere from a few $100s a month to a few $1,000s a month, depending on the area. So it's really good, especially if you live in a fire zone next to hills, anything like that, to get those insurance quotes before you go into escrow and before you even decide to place an offer, if possible. Okay, so now let's go ahead and get into placing offers on here. So when you place an offer, like I said, just because they listed it at that price, the seller listed at that price, doesn't mean it's going to sell for that price. And just because your agent said this is what the market value of the home is in a normal market, doesn't mean it's going to sell for that either. Oftentimes, especially in today's market, when you're seeing more buyers and sellers in a lot of areas, you're going to have multiple offers on a lot of these properties. So it's very important, one, that you do understand what fair market value of the home is, but also you need to account for how much competition there is, the type of market it is. Because if you have no offers on a property and you're the only offer, it's a completely different negotiating strategy than if you are offering along with another 20 different buyers. It's going to most likely drive the price up. So you need to understand not only what the fair market value is, but what the high end of that value is as well. Because ideally, unless you absolutely love the property and the price isn't an issue for you, you don't want to be paying over market value for your home, no matter what market you're in. But sometimes if it's the right house in the right neighborhood and you understand the market value and understand that you're paying slightly over it and you're okay with that, then obviously that case, it's something that you can look at. But you just want to make sure that you understand the pricing and understand the market before you place offers. That way, one, you're placing a competitive offer, because if you have 10 other offers on the property and you're trying to place offers way below market value with nothing else in the offer that would entice the seller, you're just setting yourself up for failure in most cases. So you need to make sure that you're placing an offer that's going to be competitive, but also keeping yourself safe, protected, and making sure that you're comfortable with that offer at the same time. You don't want to be working with an agent that's pressuring you into getting an offer that's higher just so they can beat other offers. You want to make sure that you're comfortable with that offer, with the purchase price, and with those mortgage payments and what that means for you long term. Now, one thing I will say about the pricing of the home, if you end up getting into a bidding war and you are paying something like asking price or slightly higher than asking price, the biggest thing that I like to tell buyers is you have to understand, if you're like a typical buyer and you're not a house flipper, you're usually purchasing that home for the long term. So you're usually trying to stay there 5, 10, 15 years. So the longer you plan on being in the home, the less of an issue the price will be up front when you're paying. So obviously, you never want to overpay for a home. But if you're planning on being in that house for a long time, there's going to be a little bit less risk for you, because the longer you're in that home, the less risk is going to be carried on you as the buyer, because over the long term, home prices have always gone up. So it's something to consider when you're placing offers, is how long you plan on being in that property. Because if you only think you're going to be there for 2 or 3 years, you absolutely do not want to be overpaying at all for a home, because that's when you can really get yourself into trouble if you have to sell your house in 2 or 3 years from now when something did happen in the market where there was a downturn temporarily. It sets yourself up for failure. So that's something that you really want to consider before you place an offer. How long do you plan on being in that home? Because that will often dictate some of the strategy around you placing that offer, if that makes sense. So that's why I have to say it has to do with the market as well as your own personal goals and what you plan on doing with the property. So let's go ahead and say that you go ahead and now place the offer. So once you place the offer, typically in most markets, the seller is going to get back to you within 2 or 3 days. Now, sometimes you'll see a seller where they say, I'm looking at all offers on Tuesday and I'll get back to everybody on Wednesday. And you might be placing an offer on a Saturday or Sunday. So sometimes you'll know upfront that they're not going to be giving any feedback to you for a few days. However, typically in the contract, it will say the offer is going to expire after a set number of days. If you need to make it shorter, you can. If you want to make it longer, you can. However, usually the seller will get back to you in 2 or 3 days. Now, depending on the situation, if you're the only offer on the property or if there's multiple offers on the property, when they do respond to you, typically, in most cases at least, the seller is not just going to say, yes, we accept your offer, let's go ahead and go into escrow. The seller is always going to be looking to try to get the best deal that they can as well. And the agent working with that seller is probably doing the same thing. So typically, even if it doesn't have to do with the price, you're always going to receive a counteroffer. Now, if you're the only offer on the property, the seller is going to issue something called basically a seller counteroffer. And I want to bring that up because the difference in the wording is extremely important when you're responding to these. So if they issue a seller counteroffer, let's say they go in there and they say, we'd like you to come up by $5,000. We'd like you to shorten your escrow period from 30 days to 21 days. If you say yes to all of that and you sign it, congratulations, you're now in escrow. So that basically allows you and the seller to come to an agreement on all the terms in the contract, and that's officially when you can go into escrow. However, what's going to be more likely in the 2024 market is there are going to be multiple offers on the property. So when they give you a counter offer, it's going to be a seller multiple counter offer. So it's important, like I said, to know the difference, because that one word changes how the response is. So let's go ahead and say the same thing. The seller is asking you to come up $5,000 and shorten your escrow period a little bit on there. If you say yes to everything, because it's a seller multiple counter offer, which means there's a counter offer out to multiple buyers, you are not actually in escrow at that point. You're just saying, yes, I agree to your terms, but ultimately it's going to be up to the seller to decide which offer they come back with that they want to actually accept. So even if you go and say yes to everything, if it's a seller multiple counter offer, the seller is still the deciding factor on which offer they want to choose. So it's important to know and make sure that you don't get your hopes up when you sign that offer if it's a multiple counter offer, because it's ultimately still in the seller's hands. So hopefully you understand that. And again, hopefully if you're working with an agent, they're going to walk you through that as you're going through the process, so it's not confusing to you and at least you understand it. But I want to make sure that you have a general understanding that there are different types of counteroffers the seller can issue you, because that's something you don't want to be confused about. So let's go ahead and say that you did say the seller sent you a counteroffer, and you now send them a counteroffer back and say, yes, we will shorten the contingency period. However, we are not going up in price. Go back and forth. Typically in today's market, you're not usually going back and forth more than 1 or 2 times with the seller before you can really understand if you're going to be able to make a deal or not. Either you're going to be really far apart and you can see that the seller and buyer are nowhere near each other and the deal is just not going to work, or you can see that you're pretty close together and most likely between 1 or 2 counter offers, you're going to be able to figure something out that you can both agree on and be able to get into escrow. So if you're going back and forth and you're still really far apart and you're on the second counter offer, that's when it gets a little bit harder. It really just depends on how motivated the seller is to sell the property, and it depends on the situation on how many other buyers are out there and what type of offers there are. But usually, once they issue counter offers, they're going to ask you to respond in a set number of days. You're going to respond, and then the seller has a set number of days to respond as well. But usually from the time you place an offer to the time you go through all these counter offers and actually get into escrow, usually that is going to be about a week. So sometimes it could be slightly longer, but if you're trying to figure out, once I place an offer, when might I be in escrow, you can usually count on about a week from when you place the offer to figure out if it's going to work out or not. So let's go ahead and now move on and assume that you went back and forth with the seller. You both found an agreement that you can go with. Once you both sign that, you are now officially in escrow. Your offer is accepted. At this point, this is where things start moving a little bit quickly. So this is the part that I always like to go over with first-time home buyers, because it's something that if you're not prepared for it, it could be very confusing. It could be very stressful, because there is a lot going on in escrow within the first 7 to 10 days that you have to really be prepared for. Okay, so let's go ahead and go over that information now. And hopefully when the time comes and you do get into escrow, this information will help you navigate the process and have a lot less stress while you're doing it. So typically when you go into escrow, one of the first things you're going to be doing, which we talked about briefly before, is you're going to be submitting that earnest money deposit. So that 1 to 3% of the purchase price that you negotiated with the seller on, you're going to need to place that in escrow. Typically, you're transferring that through a bank, through an electronic transfer within 3 business days of opening escrow. So again, that money needs to be liquid in your bank account, ready to be sent over before you place offers. That way you can fulfill that part of the contract, because if you can't transfer it quick enough, the seller could cancel a contract on you very quickly. So you want to make sure that you have that information, you have that dollar amount in your bank account ready to transfer. So usually the day after you open escrow is going to contact you and they're going to say, please transfer us this amount of money into this bank account. Now, this is where I always tell all buyers that you need to be extremely careful about where you're transferring money, because wire fraud is on the rise. It is something that's out there. So it's something where people get hacked into, let's say, the escrow company. The email system gets hacked and they figure out that you just went into escrow, and they're going to send you a fake email with a fake digit to be able to transfer the money to. You go ahead and do that, and then all of a sudden escrow gets back to you saying, I never received the money. You go back to your bank account, the money's gone. And when it's gone, when you do electronic transfer, it's gone. It's extremely difficult to get back, extremely difficult to trace. So what I always say when I'm working with any buyer is never transfer money without talking to the agent first and having someone else verify that's actually where it's supposed to go. So the typical process that I use is at the beginning of escrow, I get the contact information from the selling agent directly. So I have escrow's information, their phone number, their email, the actual escrow officer, so the name of them to talk to. And that way, when escrow sends you instructions, I'm going to give you that information. You're going to call them and verbally go over the phone to go over all that information. What is the account number that needs transferred? What's the dollar amount? Because that way you're talking to them on the phone. It's been verified that it's them. And when you transfer the money, it's going to be secure that way. So I always just tell buyers, just don't transfer money without talking to your agent first. Make sure it's verified that it's going to the right place. Usually escrow companies are not going to send you a full account number. So if you see a full account number in your normal inbox, that's probably a red flag that you definitely don't want to send any money to that account number. Typically, escrow is either going to send you a secured email that has a password, or they're going to give you partial account numbers and say, please call us for the remaining number as well. So that's typically how it's done to protect you as a consumer, to make sure that the money is going to the right place. So again, easiest thing to do with that, just make sure you verify with your agent before you transfer any money. So the second thing you need to do, and typically what I like doing is actually scheduling this a few days before we go in escrow. But the second thing you need to do is schedule your general inspection. So a general inspection is just that. It's like a general report card on the overall health of your house. So they're inspecting all of your major systems from the outside. They're not tearing open walls to look at things. They do have different tools they can use to be able to kind of look through walls with heat and water, moisture, things like that. However, they're going to be giving you a general idea of the condition of the house. They're testing every electrical outlet. They're looking at the plumbing. They're looking at everything they can find to figure out exactly what's wrong with the house, as well as what's right with it. Maybe, and this is often the case, especially with older homes who've had a couple different owners, a lot of handyman work tends to be done by the homeowner. Maybe it wasn't the licensed contractor. So they're going to find different things throughout the house that might be odd, not to code, that the previous sellers did just by watching some YouTube videos or something, and basically tried to get it done correctly, but didn't end up doing it. Those are the type of things that general inspectors are typically finding. And then again, they're testing all your major systems. So they're looking at your water heater, they're looking at your HVAC system, making sure it's blowing hot air, blowing cold air, and making sure everything is in good working order. So when they do this inspection, remember they're a general inspector. So if they find a bunch of things that's wrong with the plumbing, they're going to tell you, hey, there's a couple things that are odd with the plumbing here. I highly recommend that you get a plumber, specifically a licensed plumber out here, to give you a better idea of what might be going on, as well as how much it might cost to fix. So that's something that the general inspector might recommend once they do those inspections. Now, as a first-time home buyer, one of the things that I always tell you, and usually what I do is send you a sample report so you can have an understanding of what you're about to see, is that when you see a home inspection report for the first time, it could be a little overwhelming because it's 40 or 50 pages long, typically full of a bunch of red letters and writing. It makes it look like the house is completely falling apart. That's their job. They're trying to find everything wrong with the house, from a cracked plate on the light switch all the way to the HVAC system not working in the house. They're pointing out everything they can about the house that's not to building standard and that's not correct. So when you look that over, you want to have that understanding. That's what their job is. It's completely normal to have that much information on an inspection report. And what the next process is to figure out, do I need any secondary inspections based on what that general inspector said? And then you want to start going over that and actually going over line by line with your agent to figure out what might be an issue, what's a red flag, what are things that are definitely problems, and what are things that I might be able to deal with maybe some other time once I own the house. Later down the line, it's something that I'm not too worried about. So typically what I like to do when I'm going through general inspection reports is I categorize everything into 4 categories. So number 1, health and safety. If there's anything health and safety wise in the house, so there's electric cords hanging down that are live that if you touched, you'd get electrocuted. Those are kind of in the first categories of major issues that typically you're going to want to ask the seller to fix. Next category, major functionality. So if the HVAC system's not working, if something in the plumbing is broken and 3 of the sinks in the house are backing up and you can't get them to work, that's major functionality in the house. So those are things typically that, again, you're going to want to ask the seller to fix, because what you want to think of is what is a typical buyer going to reasonably ask the seller to fix when they're looking at this report. So if it's something that really impacts your day-to-day life, that's typically something I'm going to recommend that you put on what's called a repair request later down the line once you go through all the inspection phases. So that's number 2. Third, and this is where the large majority of the issues are going to fall, is more of a handyman work, or maybe a specialist like a plumber can go in and fix it in less than an hour. So these are the things that over the years, as sellers own homes and maintain their homes, they just sometimes break down and they're not maintained the way they're supposed to. And you're going to find things that might be a $20 fix, a $50 fix, a $100 fix throughout the house. And these things, if they're not health and safety issues and they're not major functionality issues, that's the category they fall into. And again, some of these things might be deal breakers for you. Sometimes they might not be deal breakers and you can live with them. It's going to be up to you to kind of discuss that and go over it with your agent on what of those things that you're going to want to include in a repair request as well. And what are those things that you're comfortable with and know that it's not going to be that big of an issue and you can deal with if the seller decided not to fix those before you purchase the home. And then the 4th category is cosmetic. So in today's market, if you go into a house and you don't like the color of the cabinets, if you don't like the different type of hardware they use, and it doesn't look good to you, that's not something the seller is typically going to fix. So that's going to be up to you to change once you move in, repaint if you want to, put new hardware on there. But if it's functioning, there's nothing wrong with it, you just don't like the way it looks, that's something that you're just really not going to be able to have the seller fix in almost any circumstance, but especially when it's more of a seller's market right now. So those are kind of the 4 different categories that I like to clump things in as we go through that inspection report on there. So inspection reports, typically you want to have them done as quick as possible, and we'll go over the reasons why in a second, but typically that's being done within the first, let's say 2 to 5 days after you go into escrow. So it's happening pretty quickly. So once that inspection's done, if there's any secondary inspections that need to be done, like a plumber or a roofer, you're scheduling that for a few days later. So usually most of your inspections are going to be done within that first week of opening escrow. So that's one side of things. The second side of things is the paperwork side. Always the fun part about buying a home is all the paperwork involved. So during the first week, you're going to have 2 major chunks of paperwork sent to you. First one is going to be your escrow opening packet. So this one is sent to you from escrow, as the name implies, and it's basically all the information that they're going to need to officially transfer the title into your name, all your tax information, how you want to hold the property. All that information is something that you're going to need to fill out. Now, depending on the escrow company, some of them will require you to do it by hand and send it back to them. There are more and more companies, however, they're allowing you to do a lot of it by electronic form now. So digital signing things, making it a lot more convenient. It just depends on the escrow company. So you're going through, you're filling information out. This is where if you have a tax advisor or a CPA you can talk to, that's the paperwork side of things that they can get involved with, because a lot of it has tax implications. Now, as a real estate professional, I don't have my tax license, so there are some documentation, some documents in there that real estate agents really can't give you advice on unless they happen to be some type of licensed tax professional at the same time. Typically, you're going to have to talk to your tax advisor to get some of that information filled out if you have questions about it, or you can call the escrow company and they can kind of point you in the right direction as well. Other forms on there, your agent can help you out with as well. So that's going to be one packet that gets to you. With that packet, you do want to fill it out as quick as you can. It's not something that has to be done within an hour or two, but typically a day or two, you want to go through, fill it out, get it back to the escrow company, because the escrow company needs that so they can start their documentation and get things figured out on their end. So that way they can get closer to closing escrow and making sure there's no issues on their end before they do so nothing pops up at the last minute. So the faster you get it back to them, the less chance you're going to have issues later on that's going to hold up escrow closing for some reason. Now, the second set of documents you get is typically going to be from the seller. It's called the seller's disclosure packet. So typically, this is going to be everything that the seller knows about the property. So does it have sprinklers? What type of hookups does it have for dryer? Is it electric? Is it gas? Basically, everything the seller knows about the property, they're going to include these disclosures. Any major functionality issues to the property, any major updates they've done to the property should all be disclosed to you in those seller disclosure packet. Now, also included in this is going to be a bunch of California disclosures as well. So in that, you'll find things that you'll basically have to go through and sign. You're not filling the information out, but you're reading it and acknowledging that you saw it. All of things have to do with different safety aspects of a home. So for instance, your water heater, you need to make sure that it's braced in two different areas, in certain areas on the water heater to make sure it's earthquake proof. You need to make sure you have smoke alarms in the house in the right places to make sure that your house is protected. A lot of these disclosures are going to come and ask you to fill out. Now, if you're working with a good agent, they're going to help you through these disclosures. They're going to review them as well and kind of point out any red flags that they see. However, ultimately, this is your house that you're purchasing. So you really need to make sure that you're taking your time going through these documents one by one, reading them and understanding them. So that way you know what you're getting when you purchase the house. So once you look at that seller disclosure packet, and once you have your inspection done, the idea is you can take all the information you get from the seller, all the information that the general inspector gives to you, put it all together, and that's going to give you a fairly good understanding of the general condition of the home. So this would give you an idea of what you should expect when you move in. Now, is it going to catch everything? No. Like I said before, they're not going to be able to look behind walls if there's a pinhole leak that no one can detect yet. Things like that can happen. However, it's going to give you a good idea of the general condition of the home, anything that you should know about the house before you decide to move forward to purchase that home. So all of that information is being given to you typically within the first 7 days to review. And if you have an HOA attached to it, typically you're getting HOA documents like we talked about earlier as well. So you can review those as well and figure out if there's any rules or regulations in the HOA that you're not comfortable with that would make you want to back out of escrow as well. Okay, so now let's go ahead and talk about contingencies. So if you're not familiar with contingencies, basically what a contingency is, it's something put in place in the contract to protect you as a buyer. So if you need to exit the contract, you're able to do so. And typically you're going to be able to get that deposit back that you put in at the very beginning of escrow. Now, there are a lot of contingencies in the contract. However, the three main ones that I want to go over because they're the three most important ones, especially if you're getting a loan on the property, is going to be inspection, appraisal, and loan contingency. Let's go through those in order. So inspection contingency. So typically, as the California contract is written, if you don't change anything, you're going to have 17 days to go through the house as soon as you open escrow and do any inspection you want on the property to be able to figure out the general condition of it. Now, typically, you have that general inspection done, and then maybe a secondary inspection with a plumber or a roofer. And maybe you're having that termite inspection done. Either the seller's paying for it or you're paying for it separately to have it done as well. But you're basically going through and getting any inspection you want done on the house. Now, another pretty common one, especially if it's an older home that I'm recommending for a lot of buyers, is also a sewer line inspection. So especially if the house has trees in it or trees in the front yard, what tends to happen, especially with older homes that are, let's say, 40, 50, 60 years old, what you find often in Orange County now, is the actual material they're made of. So either it's cast iron or clay piping where your main drain line's going out is starting to fail. So it's at the age where you're going to have cracks in it. It's going to start failing and fall apart. So typically you want to have an actual plumber go out there for you, and they'll run a camera down the main sewer line and see if there's any major issues in that sewer line for you. So you can figure out if you have tree roots going into your sewer that's blocking the water from coming out. If you have any giant cracks, it could be an issue on there. It's something that's important to do, especially with older homes, because the cost to fix those can be very expensive. So the problem with most areas in Orange County is that you are responsible for the main sewer line going from your house all the way to the middle of the street, typically where your sewer line connects to the main city line. So which means if that sewer line is broken coming from your house, you have to replace the entire thing, which goes under sidewalk, which goes under the street. And that's your responsibility to pay and get a lot of that fixed, dug up. And it could be $15, $20, $25, $30, $40,000 to get that taken care of. So that's why I always recommend, usually it's about $350-ish to get a sewer line inspection, but have it done as a preventative measure. So that way you can save a lot of money if you find any issues. Now, there are some other ways to temporarily fix it to make it last for like another 10, 15 years. There's different linings that can blow in if it's the right type of piping on there. However, again, the more information you have about the house before you decide to purchase it, the better off you're going to be, the less surprises that you're going to have those first couple years that you're in the house. So I always recommend that you have that sewer line inspection done on an older home as well. So that inspection contingency is there to protect you. So if you do find something wrong with the house during one of those inspections, and you go and you ask the seller to fix it and they refuse, this inspection contingency allows you to say, I did an inspection, I didn't like the way it turned out, you're not agreeing to fix it, so I need to back out of this contract and I need to go find another home. As long as you have this contingency in place for the inspection, you can do so, and you get your deposit back when you exit escrow. It might take a few days to get back, but you get that deposit back and you go find a new home. And really the only money that you'll be out in that case would be any inspections that you had done, because it was a service that was already performed. So that would be the only disadvantage of backing out of escrow, is that any inspection you had done, anyone you had out there looking at the property you paid for, that's going to be a cost that you have to eat. But in the general grand scheme of things, if it's saving you $20,000, $30,000, $40,000, it's probably worth it to be able to spend that $500, $600, get those inspections done, and make sure the property is in good condition. So that is going to give you that ability to do that. So typically you have the inspection done, you submit a repair request, you wait for the seller to respond. If the seller, typically what you'll see is you'll ask them, I want these 3 things fixed, and maybe I want credit for these things. So you don't necessarily need the seller to fix it right away, but you know that it needs to be fixed and it's something that you want to get taken care of. And maybe you say, I want these 3 things fixed and I want a $2,000 credit so I can fix these 5 things that we also found on the property. So like I said, it doesn't necessarily mean the seller needs to fix it during escrow. It could be a combination of those. And oftentimes when you go back and forth with the seller, that's typically what it ends up being, is maybe they'll fix some things, maybe they'll give you a credit for some things. However, as a buyer, you always want the least amount of liability on you. So if the seller is willing to fix it in escrow, typically that's going to give you the least amount of liability. So for instance, if you find a plumbing issue and you say, I would like you to fix this, and they say, no, we just want to give you some credit. The plumber said it was going to be $2,000 to fix, so we'll give you $2,000 at the end of escrow. You can go ahead and get it fixed once you move in. Let's say you do that deal. You escrow closes. You go have the plumber go out there and get it fixed. However, he opens it up and then finds a bunch of mold that has to be taken care of as well, and a couple more cracked pipes. And now that $2,000 repair has turned into a $10,000 repair. All of that is now on you as a new owner of the home. However, if the seller agrees to fix it during escrow and he finds those issues, then that's going to be on them to get those issues fixed and not you. So it takes the liability off of you and puts it onto the seller. So typically, usually best case scenario, the seller's taking care of it during escrow and you're able to have it looked at and making sure it's done professionally when you wrap up escrow at the end, which we'll talk about. However, that's going to give you the least amount of liability. The next way to go about it, like I said, is to get credit. However, it might sound simpler and be easier for the seller, but it puts that liability on you. So if something were wrong and it took more money to fix it, now you have to eat that cost instead of the seller. So hopefully that makes sense, that when you negotiate, you're trying to get the best deal and the least amount of liability for you. So usually you're going to push really hard to have the seller take care of it during escrow so you don't have to deal with it later on. So you go back and forth to the seller and you eventually agree on what they're going to fix, what they're not going to fix. You're comfortable purchasing the home based on what they said, and they're comfortable doing the fixes for you. You both sign off on it. So at this point, now you can actually lift that contingency. So the important thing with contingencies to know is they're not automatically lifted on the deadline. So on day 17, it's not like that inspection contingency disappears and you no longer have it. You have to physically sign a piece of paper that says, I am lifting this contingency and I'm going to move forward. I'm okay with the condition of the house. I'm okay with the repairs the sellers agreed to do. And we're moving forward to getting close to closing escrow. Now, when you do that, that basically tells you that you can't go back and say, you know what, I changed my mind. I do want them to fix this as well. You don't have that negotiating power anymore. So when you remove that contingency, you want to be sure that you're comfortable with the condition of the house and what the seller has agreed to fix or give you credit for before removing that contingency. So let's say that day 17 comes and you don't have that contingency removed. So what happens if it's not automatically removed? Well, typically the seller is going to issue something called a notice to perform, which basically says, hey, you're in breach of the contract. You said you were going to move it on day 17. You didn't. I am now giving you 2 days to remove this contingency, or I have the right to cancel escrow and find a new buyer for the home. So that contingency is not going to stay in place forever. However, the seller has to issue that notice to perform to you, and that gives you an additional 2 days to be able to remove that contingency in order to keep escrow going. Now, if you don't remove it within those 2 days, then the seller can say, okay, you know what? I'm canceling escrow. I'm going to go find a new buyer. However, because you never remove that contingency, you're still getting your deposit back. So just because you refuse to remove that contingency doesn't mean you lose that deposit, because that contingency is still in place. So again, hopefully that makes sense to you. Okay, so next one, appraisal. So again, this is if you're getting a loan on the property. Typically, the lender is going to want a third-party appraiser to go out there, and they're just covering themselves. So they want to make sure that the price you offered to pay for the home is actually what the house is worth. So usually, and this is usually happening again on that first week of escrow, an appraiser is going to contact the selling agent, go to the property. They're going to go through the rooms, measure them, take a few pictures, go back to their office, and basically do very similar work that the agents are doing, which is going through the comparable sales, adjusting them as needed to figure out what the fair market value of that home is worth. So when they do this, usually most appraisers right now, especially because there's not a lot of sales happening at the beginning of the year, they can usually do this in a week, maybe a week and a half. Sometimes it takes a little bit longer depending on the lender and how fast they are at contacting the appraisal company. But usually they go get the appraisal done. The appraisal comes back within a week and a half. So if the appraisal comes back at value, so the appraiser basically agrees, yes, the price you're offering to pay is the price the house is worth, no problem. If they come back and say this house is actually worth more than what you're paying for it, obviously, then you're going to be okay as well. So if you went somehow and got a price under market value, the appraiser is not going to be, and the lender, I should say, is not going to be mad at that, because you already have built-in equity in your home. So they don't really care if it's going above that. Now, if they come back and say, I appraised this property and it's actually worth $50,000 less than you have it in escrow for, that's where there could be an issue. And that's why you have this appraisal contingency. So if it is the case where the appraiser comes back and says, this property is not worth what you're trying to pay for it, this basically only allows the lender to give you a loan up to what that appraised value is. So let's say you're buying a home that's $700,000. The appraiser comes back and says it's worth $650,000. Now you're only able to get a loan up to $650,000. So what this basically does is it kicks off another round of negotiations inside escrow for the price of the home. And it can go a couple different ways. So the first way it could go is you can go back to the seller and say, house was appraised. It only appraised for $650,000. My lender can only give me a loan for $650,000. So in order for me to continue purchasing this house, I have to have you drop the price down to $650. Otherwise, I'm not going to be able to buy this house, and I'm going to have to back out of escrow. So that's the number one way you can do it. Another thing that would happen is if you like the house and the seller refuses to go down to that price, the seller might say, you know what, you told me you're going to pay $700,000. I'm only accepting $700,000. And if you really like the house and you still want it, the only way to really make that work is you need to cover the difference between the appraised value and the purchase price in cash. So if it's $50,000, you're going to have to now take an additional $50,000, bring it into escrow in order to be able to make that transaction work and to purchase that property. So unless you have cash set aside, this might not be an option that you're even able to do. So it's something to definitely consider if you can, and if that makes sense to you, and maybe the appraisal came back and you understand there was 10 offers on the property, so you had to go slightly above asking price. Typically, if it appraises for under asking price, if you have a good agent, you'll know ahead of time that you're going to have an issue. They'll be able to tell you, hey, this property is worth $650. You really loved it. It checked all your boxes. I know you offered to pay $700 for it, but you're most likely going to have an issue with the appraisal when it comes back. So if it comes back and it's a shock, that's probably not a good thing, because usually your agent should be able to give you a very good idea of what the price range for the home is. And so you'll expect it coming. But if they don't, and you don't expect that coming, then you have to make a decision if the seller is unwilling to move on the price, if you're going to be able to come up with that money to pay the difference or not. And then third, the other way to handle it is you're negotiating somewhere between. So maybe the seller says, okay, I'll come down $20,000 and you can come up $30,000 and we can still make this deal work, because I don't want to go through the effort of putting it back on the market, finding another buyer, going into escrow again. So in order to avoid that, maybe I'm willing to reduce the price a little bit. So finding a price somewhere in between that works for both of you is also another option as well. But basically, you need to find one of those three options that work in order to proceed purchasing the house. If you can't, you have that appraisal contingency in place. You're able to back out of escrow and then go find another home. Now, once the appraisal happens, just like the general inspection, if you pay for that appraisal up front, that's not money you can get back. So if you pay for that appraisal, you pay for the general inspection, you might be able to get out of escrow. However, you might be out $1,000, $1,200, $1,400, depending on how many different inspections you had done on the property. But you're able to back out of escrow, get that deposit back, and go find a new home. So that's what that appraisal contingency is there for. Now, the third one is going to be the loan contingency. Now, this one also comes into play back when we originally started talking about lenders and the fully underwritten pre-approval. And let me go over why. So with the loan contingency, typically what lenders are going to do is they're going to, let's say they don't give you a fully underwritten pre-approval. So the typical process is they get some documentation from you, get the pre-approval going, you get into escrow, and then they ask for more documentation, all of the tiny things to basically cross their T's, dot their I's to fully approve you for the loan. And then once that appraisal comes back, they're taking that appraisal report, all the other documentation they have, they're sending it to the underwriter one final time and getting a final checkoff saying, yes, we were able to give you a loan for this property. So because you have all that having to happen, typically you need to make sure that you have a loan contingency in place. So let's say that you did get the appraisal back, it came back fine. However, when the lender ran the final batch of paperwork, something wasn't quite right and you couldn't get a loan for the property. This allows you to get out of escrow, back out of escrow, again, getting your deposit back because the lender wasn't able to get you the loan for the property due to some paperwork issue that they thought they can get with it. They thought they can give you the loan, but they ended up not being able to once they went through the whole underwriting process. So this is why, again, that fully underwritten pre-approval is so important, because this almost basically eliminates any of those issues happening. And oftentimes it also means that the loan contingency can be reduced significantly to make your offer more competitive. Because if the lender has done all the work up front and basically all they need is that appraisal paperwork that they need to send in to the underwriter just to get that one piece of paperwork signed off on, and maybe an updated paycheck stub as you get towards the end of escrow, it's much easier to remove that loan contingency faster because the lender has a lot less work to do because they did everything all up front for you. So again, This is why that fully underwritten pre-approval is so important, because it can help save you during escrow. Make sure you don't have any issues, that you don't lose the home after being in escrow for 2, almost 3 weeks at this point, and all of a sudden you get your dreams crushed because the lender said they can give you a loan and then ultimately they weren't able to. So that's why it's, again, very important to have that fully underwritten pre-approval if you can get it, because not a lot of lenders will offer that, especially bigger banks. They're not going to go through that whole process because there's just too many applicants and too many customers to take care of. When you work with smaller, more local lenders, you tend to be able to find this more often, to be able to find those lenders that will take the time, get all the paperwork out of the way up front, and it makes it a much smoother process as you go through escrow as well. So again, that's what that loan contingency is there for. And if you can't get the loan, it allows you to get out of escrow if you need to. Now, like I said, with the loan contingency and able to shorten it, the same thing goes with the inspection and the appraisal contingency. So in order to be able to make a competitive offer in a competitive environment, let's see if I can get through the rest of this without losing my voice. A competitive offer in a competitive environment, you might be able to reduce that inspection contingency as well as appraisal contingency. Like I said, with the appraisal contingency, oftentimes it's 17 days as the contract's written, but if you have a lender that can get it ordered the day you open escrow, usually the appraiser can get out there, get the appraisal report back within 7 to 10 days. So you don't need that full 17 days. When you talk to your lender, you can ask them, how fast are you getting your appraisals back? When do you order your appraisals? And this is good information to know, because if they say we order them the day of or the day after you open escrow, that's a good sign that your appraisal is going to happen a little bit quicker. And they might be able to tell you, typically our appraisals are coming back within 5 or 6 days once they are scheduled and they go out there and actually do the appraisal. Then they can give you a better timeline involved, saying you can comfortably reduce your appraisal contingency from 17 to 12 days. And then on the inspection side of things, like I was talking about a little bit before, if you're able to schedule the inspection before you even get into escrow, so if you work with an inspector, oftentimes like myself, if you have an agent as a great inspector, you use them, oftentimes they're able to possibly put a hold on a date for the inspection before you even get into escrow, and then confirm it once you get into escrow. The advantage of this is, let's say you place an offer, you can have the inspector say, I'm going to hold this inspection for you that's 4 days out. You go talk to the seller, go back and forth, and on day 2 or 3, you get into escrow. Now you have that inspection maybe a day or 2 after escrow opens. So do you really need 17 days to have that general inspection done? Even if you have to have a secondary inspection done, typically between that and going back and forth to the seller, you probably don't need more than 10 to 12 days to do that. So again, you can reduce the contingency from 17 days down to make it a more competitive offer. So why does it make it a more competitive offer? Because the other thing you want to know with contingencies is, once you remove all of your contingencies, you're locked into purchasing the property, and it's extremely hard to get out of it once those contingencies are removed. So the way the seller looks at it is, the faster those contingencies are gone, the faster you're locked into buying the property, the faster I can go look for my own home, the faster I can count on that money coming in, because once contingencies are gone, it's very rare that you're ever going to see properties fall out of escrow. It can happen. Let's say you go buy jet skis a week before escrow closes, messes up your loan. That kind of stuff can happen. However, again, it's pretty rare to see escrow fail once you move all contingencies, because you've already gone through and agreed on the condition of the home. The appraisals happen. The lender has already said your loan is good. So at that point, unless the buyer yourself messes something up dramatically, it's very hard for escrow not to close at that point. So on the selling side of things, like we've talked about before, yes, the seller is looking for price, but they're also looking for certainty and making sure that if you go into escrow with them, you're going to close. If you're able to reduce those contingencies from 17 days down to all of them to 10 to 12 days, you're basically locking yourself into buying that home almost a week faster than everybody else, which is going to give the seller a little bit more confidence in selecting your offer, because you're able to get it locked in faster. So being able to reduce those contingencies when it's a hot seller's market is definitely vital to be able to get an offer competitive enough to be able to get accepted, even if you might not be the highest purchase price. So that is something that the contingent side of things that you really need to understand from a liability standpoint as well, is that once those are removed, you really need to purchase the property, because if it's not, and you can't purchase the property, that deposit you put in at the beginning of the escrow is typically going to be forfeited at that point to the seller. The seller is going to be able to keep that deposit if you can't purchase that property for any reason. So really, you want to make sure that you're sure that you can purchase that property both financially and all the repairs and everything are taken care of that you want to be taken care of, and you've negotiated those before you agree to lift all those contingencies, because then you're locked in and there's some real financial consequences if you can't go through and purchase that property afterwards. Okay, so that is kind of the majority of escrow. Now, like I said, when you open escrow, most of that stuff that we're talking about is happening within those first 7 to 10 days. Once those first 7 to 10 days are gone, the appraiser's done, inspections have happened, you've often done the negotiations for it. The loan, typically most of the paperwork on that side of stuff is done as well. They're maybe going through the underwriting department one more time, but nothing that you're having to do except sending maybe a few more documentations to them. All the major paperwork from escrows out of the way, from the sellers out of the way. So all of that has happened over that first 7 to 10 days, which is why it can feel a little chaotic. But after that, everything pretty much slows down. So once those contingencies are lifted, there's really not much going on except everybody waiting around for escrow to close. Yes, the lender might be doing some things in the background. However, on the buying side of things and on your end, you're not really doing much at all. You're kind of just waiting for escrow to close at that point. And usually you're not doing much between then all the way until about 4, maybe 5 days before escrow is scheduled to close. Then you have a few more things to do. So let's go ahead and go over that last part, which is actually getting escrow closed up on here. So usually about a week before you close escrow, once you remove your contingencies, that's when you're typically going to want to contact the utility companies and start getting things ready to transfer to your name. So at that point, you should know the date with some pretty good certainty on when escrow is going to close. And so you can schedule your utilities to basically turn on the day after escrow closes typically. And so you want to contact the gas company, the water company, the trash company, electric company, as well as your cable provider, and get all that stuff set up, especially for cable, because sometimes it might be booked out. Oftentimes they have to come out and physically put the box in the house to turn everything on. They could be booked out a week or two in advance. So if you know when you're closing escrow, you can call them, have them come out maybe a day after escrow closes. That way you're not moving into your house and then waiting for internet to be set up for another week after that because the cable company was behind. Especially in today's age where you need to be able to have that internet access, it's important to make sure that it's being set up as quick as possible. So contacting the utility companies about a week before escrow closes is a good idea to make sure everything goes smoothly. On my end, on the agent's end, one of the last things that we're doing is doing the final walkthrough with you. So this typically happens 2 to 3 days before escrow closes. And what this is basically doing is two things. So number one, we're walking the property to make sure that the house is in the same general condition as we saw it last time. So when the seller is moving the furniture out of the house, they put a giant hole in the wall. Is anything not working that was working before? These are all things we're walking through the house. So we're kind of testing the AC, testing the heater, testing the water, making sure we don't see any weird leaks anywhere in the house, any broken windows, and basically just making sure that the house is basically in the same condition as the last time you saw it. So that's number one. And then number two, if we did negotiate any repairs to be done inside escrow, that's the point at which we're checking to make sure they were done. So if they said they were going to fix a leak, we're going to go through, look at it, test it, make sure that leak was actually taken care of and fixed. And then we're going to document everything, whether it was or wasn't done. So what I often like to say with that final walkthrough is that it's typically not a condition of the sale, which means that if you do find something that's wrong with the property, let's say they didn't repair things like they said they were going to, oftentimes this is not going to stop escrow from closing. However, you're going to document it, bring it to the seller's attention immediately, because everything's on paper. They agreed to do it on paper. They signed off on it. You recorded it saying it wasn't done. Legally, you have the law on your side to make sure it gets done. But Oftentimes, well, not oftentimes, but sometimes what might be to happen, let's say it's 2 days before escrow closes, there's something wrong with the AC that they said they were going to fix and they didn't. They call the AC company out and they can't get out there for 3 or 4 days. Now, you can either try to get escrow delayed closing and hold things up, or you can still close escrow and then have that company come in after escrow closes, after you own the home, and have them fix it. The seller's still paying for it. You're verifying that it was taken care of. And then you're signing a document saying, yes, it was taken care of, and making sure everything was done correctly. So that's, again, also what that final walkthrough is for, is to make sure that everything was done. If it wasn't, we're documenting and then making sure it gets done as soon as possible. So that way you have the house and you're buying it in the condition that it was stated that it was going to be in by the seller in the contract. So that's what the final walkthrough is on our end. On the loan side of things, typically about 5 days before escrow closes, you're going to get one last document packet that you have to sign, and those are your final loan documents. So this is basically all the information about the loan, your monthly payments, all the cost breakdown for you. Now, it can be signed usually one or two ways. So what happens is the lender is going to take that packet, send it to the escrow company. The escrow company will contact you and ask you, would you like to come into our office to sign this, or do you want us to send a notary out and they can sign it at a place convenient to you? So either your work or your house, whatever is easiest for you to go sign it, they can send someone out there to get it signed that way. Or if their office is close enough, you can go in, get it signed, and then you're basically able to get that last, excuse me, I'm almost done here, last set of documents taken care of. And that way it needs to be basically signed in ink. It's not going to be, as of yet, they're trying to do some laws around it right now, but as of yet, has to be signed in person by a notary or with the escrow company. You sign those documents. It's not very long, but you sign those documents, and that's the last set of documents that you'll be signing from the lender. And then basically after that, the last thing that happens is you're going to deposit the remaining funds for your down payment. So if you put in, let's say 3% for your earnest money down payment, and you're going to put in a total of 10%, you're going to deposit the remaining 7% of the funds plus any closing costs, which again will be on those loan documents, all in the escrow. So they have all the money they need to be able to disperse the funds how they should. Sometimes you might end up paying a little bit more than you need to, and then they'll refund you later. But typically it's going to be very close to accurate in terms of how much money you're putting in there. You're putting in those funds usually a couple days before escrow closes. Ideally, sometimes it could be the day before escrow closes, depending on how fast the documents are signed and how escrow is going. But you're depositing those funds, and that's one of the last things that you'll be doing. Once you do that, the next step is closing. So on the day of closing, as a buyer, there's not really much you have to do at all. So you're just sitting back and waiting for updates at this point. So usually you're going to have the escrow company. They're sending all the information to the title company. The title company is then taking that to the county recorder. Once the county recorder records that information, puts their stamp on it, that's officially when the house goes from the old owner's name into your name. So if the contract is written standard, as soon as we get confirmation of that, that's officially when you're able to get the keys to the house. You can go to the house either with your agent, or if there's a lockbox on the property, the agent can give you a code for it so you can pick up the keys. But typically that's legally allowed when you're allowed to take possession of the property, get the keys, and get into your home on there. So that is officially when you are becoming a homeowner. So the last thing I have to say about that is sometimes with the way things happen, especially if the seller is trying to purchase a property of their own, and you'll know this ahead of time because it'll be written into the contract, but sometimes once you close escrow, you're not taking over the property and getting the keys right away. You might need to wait a few days. And the reason for this is if you close the property, they take the funds from that escrow, and then it needs to transfer from that escrow into the seller's escrow to purchase their other house they're trying to purchase at the same time. And then that seller needs to be able to move out of their own property into their new property before you're able to get into it. So this is basically called close of escrow plus 3 days, which is typical when the seller is also a buyer on another transaction. So basically you'll close escrow, but you won't officially get the keys until 3 days after escrow closes, when the funds have been transferred to the other transaction, the seller moves out, and now you can move into the property. So again, this will all be negotiated in the contract up front, so you'll know ahead of time, but that would be the only way that you wouldn't get the actual keys when escrow closes. So I hope that makes sense. Okay, so thanks for sticking around this whole time. I know that was a long webinar, but hopefully you got some really valuable information about the whole process of how to purchase a home right now. Now, if you do have any other questions or you want to be walked through this process one-on-one, feel free to book a discovery call with me at any time. So you can check out the link in my bio or in the description below, depending on where you're watching this. And there'll be a calendar link. You can look at it, check a time that works for you, and we can have a one-on-one discussion on exactly what you're looking for and how I can best help you and figure out if it might be a good time for you to buy a home. Now, secondly, if you are thinking of purchasing a home, but you're just not quite ready to do so, however, you want to stay up to date on what's going on with the market, number one, make sure you follow this channel. But number two, I do also have a weekly newsletter that I put out that goes over some updated information and things you need to know about the Orange County housing market. So that way you can stay up to date. So when the time does come to be able to get ready to purchase a home, you know exactly what the market is doing and exactly what to expect. So again, you can find those links in the description below or the link in my bio to sign up for that and get that weekly email that typically has information that you're not going to find on my other social media channels. So until next week's episode, stay healthy, stay happy, and I'll see you on the next show. Bye, everybody.